Hello, traders. It is Wednesday, the 11th of December, 2019. It's 8:01 a.m. Chicago time. This is episode number 1656. Hopefully, I'm coming through to you nice and clear. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the overall market sentiment is slightly higher. Risk on dominates pretty much across the board. The Dow is weak this morning, trading 43 points down or 0.15%. Crude is off 26 cents or 0.44%. And the rest are all up. Interestingly, the treasuries are up 1.5 ticks, and the bonds are up 6 ticks. The Bund is up 32 ticks. So it's a bit of a mixed bag, but really the market's leaning on the buy side. If you may have noticed that the overnight range is pretty much the same as the day before. And we're coming into a session where the market has popped a little bit higher, holding above the overnight point of control. So that's where we stand currently in terms of what is scheduled for today. We have a couple of key events you need to be aware of. We do have the FOMC economic projections and the rate decision at 1 Central, 2 Eastern. Pay attention to that. We got core inflation and the inflation rate year on year this morning for November came in at 2.3% on the core inflation, which is in line, and 2.1%, which is a little bit higher than the forecast of 1.9%. We will get crude oil and gasoline inventories at 10:30, and then again at 2 p.m. Eastern, we will get the Fed rate decision. And then at 2:30, there will be a press conference with the Fed chair. The market is going to be paying very, 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 very particular attention to this. And so I'm expecting that we are likely to position at the open, hold sideways, and then flutter around once that comes around. Another event that's really important for all of us to pay attention to is that tomorrow is the official roll date. For U.S. indices. So starting tomorrow in the morning, December 12th, Thursday, December 12th, we will be quoting March 2020 contract. And that's the H, that'll be H0. The H0 or H20 contract in U.S. indices. So I'll be quoting just March. My software, my data feed rolls over with the official exchange. You can, but I don't usually continue to trade or monitor the old contract. I move into the new with the exchange. It takes till about midday on Friday for the volume to transition from the back month to the front month to the new front month. So many people will stick with it. Some will even trade through Monday or Tuesday, which I wouldn't recommend. So again, tomorrow we will start quoting and trading March 2020 in the ES, NQ, RTY, Dow, EMD, and so on. Expiration Friday is the 20th, and that is Quad Witching Friday. And I will not be here that day, but just remember, tomorrow we have rollover, and things get quirky when we have rollover. So there you have it. So that's where we stand. Let's take a look at what was expected yesterday versus what we got in our review segment. Yesterday, I expected a test down towards the low and a push up, and then expected the market to squeeze into the 48 area and hold steady. still keeping the lower high trend. The secondary scenario was an expectation that the market is likely to push up, take out the 42 overnight high, roll over, and push down into 25-ish area. And it could continue to spill if it has that energy. Here's what happened. It looks to me like scenario 2 was in play. Here's what actually happened. Remember, I was looking for a push higher into 43 and then the market rolling over. What it did actually is it pushed immediately below the prior day's low and rotated back up. And we ended up basically with the same structure as you would have on scenario 2, but it didn't play out in the right order. And it doesn't mean that the market has to. But it did squeeze down early and found a base. Where did it find a base? At 31.25.50. Remember, I was looking for it to test 31.25 after testing higher. And then where did it get to on the high? The overnight high was 42. I was looking for it to test that overnight high, and it went to 43. The overnight high in today's session is 43.50. And overall, the overnight session between yesterday and today had somewhat similar highs and somewhat similar point of control. The market's keeping in balance. We have a normal day type from a market profile perspective with a small and insignificant extension of the IB high. And then we have basically what is somewhat of a normal distribution of the profile. Nice taper at the top, nice taper at the bottom. The market has found equilibrium, and what it's done overnight is it's starting to base and has pushed higher. Note that the delta into the close was relatively strong. Overall, the price finished at the open, which is the equivalent of a zero delta. But you look at delta and it's a plus 10,000. There was quite a bit of buying into the close yesterday, which helped propel the product higher. Let's take a look at that. Oops, this is the composite. Hang on, I'm going to clear my voice. So there you have it. So from the prior session, extended session, the overnight session, there's the point of control. Prior session high 42, current session high 43. The prior session dropped to 16. This session didn't do that. Fairly muted overnight trade. A little bit of fluttering here and there. We had this little flutter at the open at the European market, but there isn't anything significant there. There was some news from the Chinese foreign minister. China has reiterated it has no intention of participating in trilateral arms control negotiations with the U.S. and Russia. And other than that, it really there wasn't much there to drive that little pop and drop in the European session. So that's where we stand. Really, coming into today's session, we have a very normal distribution profile, relatively elevated but normal volume, and the market's in a holding pattern inside of yesterday's range, and then, which is also inside of the prior overnight. We did put in a lower high, lower low on the day session. If you look at the 15-minute, you'll see that we've put in a lower high, lower low, lower high, lower low. We're one time framing down, but it looks to me like that's likely to come to an end, and we are likely to resume. A push higher, a squeeze higher from here. Let's take a look at the order flow real quick on ctbookmap.pro. The order flow overall, pretty noisy overnight session. There really isn't all that much to talk about. There it is. It's, same levels as the prior day. 31.31 holds some liquidity. 31.43, which really is a carryover from yesterday. 31.48, 31.50, and 31.52. I'm going to be paying very, very close attention to where the liquidity goes to, what gets canceled, what gets put back in, especially at the same price on the FOMC release. That's going to be a big clue as to what areas are likely to get small day trading opportunities. So we'll be paying attention to that. But otherwise, not seeing too much here in terms of the order flow and gleaning what is likely to play out on the open. Let's take a look at expectations for today as everybody's getting ready to run off here. Remember, at the end of the day, you need, despite what anybody is telling you, selling you, pushing on you, at the end of the day, you need to understand the market. It's so paramount that you understand the market and how it rotates, and understand the narrative and the story as best as you can. We cannot know the whys of the market. We just don't have the money, the research, resources, the access into Washington or Beijing or whatever, or Frankfurt. But what we can know is what the market's leaving behind in terms of tracks. And those tracks come in the form of time, price, and volume. And we can see with the volume profile where the market liked to participate and where the market did not. And that's enough, as far as I'm concerned, that is enough to make an assessment of what is likely to come next. We're always trading what's probable. It is always a guess, and it's always random, and it's always based on luck. You cannot avoid luck in trading, as you cannot avoid luck in life. So, but luck has a much, much better opportunity with preparedness, right? So that's what these scenarios are for, and understanding the narrative. And when the market breaches that narrative, that is even better information for us to use to stock, put on, manage, and close the next trade. That's the God's honest truth and the holy grail of trading. It is not sexy. It doesn't sell books, but that's what every professional knows, in my opinion, and lives with. Today, we're opening on the high end of the range. We're opening in range out of value of yesterday. Value was valid yesterday at 31 and a quarter and 31.38-ish. And so I'm looking for an open auction, test down into this point of control at 37, move into the prior close, consolidate, probably tag the overnight point of control, and then come back up to the open and squeeze that 31.43. Now, if you look at my stock zone areas, you'll see that there's a stock zone here at 31.43. It's played quite a bit in this 31.43 and 42 area. I expect it to consolidate, pull back, and then I'm looking for a break. And then at some point, we get the FOMC in here that is likely to flutter things one way or another. The market expects what it expects, and for today, it expects the FOMC to hold steady at 1.75%. So we're looking for it to flutter around, but overall, I'm looking for the market to resolve to the upside as it's primed to do so. We already had a pullback into the gap. We have pretty much turned around and rejected that low, and we are likely to move into higher price discovery from here. Participants are going to square up into the FOMC, so be careful. The open might be a little more aggressive than we would expect. The secondary scenario is an open that pushes higher, takes out that 42, 43 area quickly. If you notice, the prior couple of sessions, we open and we push higher. We open, in this case, we pushed lower, but we ultimately ended up pushing higher. There's a fair amount of accumulation in here over the last 2 days, despite the fact that the delta, the delta is the price is fluttering around the close. We do have a relatively strong delta. It looks to me like somebody's accumulating. So we're likely to pull back into the open, and then I'm looking for it to continue higher on scenario 2. Scenario 3 is the surprise scenario, and that is it opens, tests up, and squeezes lower for a push down. But I do expect one-time framing to end today, and I expect a bunch of people to pile on long in the 42, 43 area for a push into the 47.50, 50, and then potentially 55 with the FOMC. The tertiary scenario, push up into 43, and then sellers come in, bring it back to the 34 zone, the overnight point of control, and then release to the downside and continue to fill the gap into that 31.20.21 area, and a potential push to 17. Remember, 16 quarter was the low of the prior overnight session, and 31.14 is the MC point of control. It is the big magnet in the area. This is the most attractive price in the area in terms of volume traded at price. Important areas to remember: 42.43, 47.5, 51, 55 above. Below, we have 34, 28, and then we push into 20, 17, and 14. Got it? Got it? Good. So I'll leave you with that thought. If you happen to be one of these procrastinators who has not filled out the petition for the micro crude contract, please do so. Just take a moment to do so. Remember, tomorrow we have rollover. We'll be trading March 2020, and the delta will start to be way off, and we lose that indication until the pace of the roll is almost complete, which has happened around Wednesday, late Wednesday of the following week, and we can get back on the delta again. Okay, if none of that makes sense, you can tweet at me at twitter.com/futurestrader71. Good luck.